Hey guys, welcome to Traders Mastery. In today's video, I'm going to talk about Larry's most profitable multi-time frame strategy. And in this session, I'm going to talk about the scalping strategy. This scalping strategy is one of the most profitable trading strategy you have ever come across in the financial market or the trading industry. So, without further ado, let's dive on. Now, let's quickly talk about understanding market structures on the short-term swings. When I actually talk about market structure swing on the short-term swings, I'm actually referring to multi-time frame analysis, which is being used by Larry Williams. This time frame is being used as a way to understand the market dynamic, which is understand how the overall market is being moving from one trend to another, either using support or resistance, either using FVG, whatever means you are going to use for the trend. If you understand what the primary time frame is been doing, you can be able to trade the intermediate term time frame. This time frame is not just an ordinary time frame, it is a time frame which we can be able to trade either the pullback from the primary time frame. This helps us to understand how market is being traded in any given asset. If you understand what the medium time frame, which is the intermediate time frame, is been doing, you can be able to know where to enter during the primary time frame trend. This is where the short-term swings now comes in. When we talk about the short-term swings, which is the short-term time frame, I'm actually talking about time frame being used to understand how you can be able to capture the medium time frame or even the primary time frame. Understanding primary time frame, intermediate time frame, and the short-term time frame is your goal to become profitable in the market. The primary time frame and the intermediate time frame and the short-term time frame is being used as a time frame to be able to become profitable in any given asset of your choice. When we talk about trading style, I'm actually talking about the time you are going to spend on every trade. If you are going to become a scalper, know that you are going to hold your trade between seconds to minutes. That is how you can be able to trade your trend. When I also talk about the primary time frame on the scalper, I'm also talking about the trend. When I talk about the intermediate time frame, I'm talking about the 5-minute time frame. When I talk about the short term, I'm also talking about the 1-minute time frame. These are time frames being used to understand how you can be able to enter in any given market structure. Like in this chart, the 15-minute time frame was bullish. What happened to the 5-minute time frame? The 5-minute time frame was kind of bullish, but it creates a lot of jargons, which is deep pullback. This deep pullback can be found on the 15-minute time frame. So when you also talk about the day trader, I'm also talking about duration for you to be able to enter from minutes to hours. Are you getting what I'm saying? When you are looking for a trade, you need to understand that on the 1 hour, the primary time frame is the 1 hour chart, which is the short-term swings highs and lows, and the intermediate time frame is the 15 minutes highs and lows, which is the short term. You understand what a day trader is. Same thing also applies to the swings. When we talk about swings, I'm actually talking about days to week. As a swing trader, you should always understand that you are going to be looking for a duration between days to week. That is when your trade is going to close. If you understand in this swing trader, you should notice that days to week in every trade is being derived by the primary time frame. If you are going to be looking for short-term swings highs and lows as a swing trader, you are going to be using your 1 hour as a short-term swings market, while you are going to use your 15-minute time frame as a market structure shift to enter on the 1 hour or the 4 hours. Do you get what I'm saying? So this chart is an example of that. When I also talk about the position trader, I'm also talking about weeks to months, which is the typical time the position trader is going to hold their trade. If you notice on this chart, was kind of bullish on the daily, was kind of bullish on the 4 hour, was kind of bullish on the 1 hour. So at this process, this is where you are going to look. Remember I told you about the primary time frame, the intermediate time frame, and the shorter time frame, how they are being used in any given trading style. However, the long-term investor normally hold trade between months to years. What are they using for? Time frame are they trading? However, they are trading the weekly short-term swings and trading the daily short-term swings and the 4-hour short-term swings. Do you get what I'm saying? So at this process, this is a time frame used by Larry Williams to understand what the given asset of the market is being trading at. If you can be able to understand these time frames on the trading style, you can be able to trade any time frame or any asset of your choice. That is it. Now let's quickly talk about Larry Williams multi-timeframe scalping strategy. This strategy is one of the most profitable scalping strategy that you have ever come across in the trading industry. This scalping strategy is very straight to the point, in the sense that you can be able to make either 3-to-1 risk reward or 1-to-2 risk reward, depends on how you can be able to trade this strategy. However, this bullish setup is going to be used as opposite as bearish. Everything I'm going to say in this video is going to be opposite as bearish. When we talk about scalping strategy, remember I told you that the primary time frame is very necessary. In this setup, first of all, we have to understand that 15-minute time frame short-term swing is bullish, indicating that the overall trend is upward. After getting to know our primary time frame is bullish, what do we do next? We locate our intermediate time frame, which is the time frame we are going to understand how the median time frame is being used in the market. When we talk about the median time frame in this scalping strategy, I'm actually referring to the 5-minute time frame. This 5-minute time frame, however, must be bullish as well, but not that bullish. When I talk about the primary time frame is bullish, remember the 5-minute time frame must be bullish or not bullish. This is because, remember, we are trading pullback that is going to hit the 15-minute time frame short-term swings, which is our primary time frame. So first of all, we have to wait for 1 or 2 lower lows to form a bearish trend on the 5-minute time frame chart. This temporary bearish movement represents a pullback on our liquidity rate, setting up opportunity for we to look for a continuation using the 3-bar short-term swings low. When your time frame is bullish on the 15-minute time frame, what you are going to do is that you are going to mark your 3-bar pattern of the Larry Williams order block. Let me just call support and resistance order block. But in this case, you are going to mark the short-term swings, which is the 3-bar short-term swings low on the 15-minute time frame. After marking it up, what do you going to do? You are going to look for a liquidity rate to sweep 15-minute short-term swings to enter into the 15-minute short-term swings to be able to look for a buying scenario using your 1-minute short-term time frame. This 1-minute short-term time frame help us to understand how we can be able to enter in the market by using market structure shift in this strategy. However, in this 1-minute time frame swings, we can be able to capitalize what the 15-minute primary trend is already establishing. Do you get what I'm saying? So it all depends on where you are going to enter from. You can either use the 5-minute candlestick from the intermediate time frame, or you can either use your 1-minute market structure shift on the short-term time frame. It all depends on how you can be able to enter this trade, and you can exit at least 3-to-1. This is where the profitability now comes in. You must exit at 3-to-1, which is 1-to-3. When you risk 1, you are going to have a reward of 3. That is it in this trading strategy. Now let's quickly look at our live example on our chart. This is our primary time frame on the 15-minute time frame. Like I said, remember the first thing I told you is to look for your market trend. Once we are able to identify our market trend by using our 15-minute short-term swings, highs and lows, we can be able to understand what the market is likely to do. After getting to know this overall trend using the primary short-term swings on the primary time frame, which is called the 15-minute time frame, what do we need to do? We need to go to our 5-minute time frame. Now this is our intermediate time frame, swings, highs and lows on the 5-minute time frame chart. However, like I said, I told you earlier on our 15-minute time frame that this is our short-term swings, highs and lows. But in our 5-minute time frame, this is called intermediate time swings, highs and lows. This is because we have a short-term high, we have a short-term low to the left and a short-term low to the right. This makes up our intermediate swings, highs and lows. However, that is not what I'm going to talk in this video. All I want you to know is that this short-term swings, highs and lows on the 5-minute time frame is called a liquidity. What happened at this process? Price quickly sweep these short-term lows and it enter into our 15-minute Williams swing, theory bar swing rejection pattern. If you have not watched the video about the theory bar pattern, I will advise you to comment on the video below for me to be able to explain it in detail in my next video. However, I've already explained it in my previous video, but in this video I'm not going to talk about that because I've already marked my Williams theory bar pattern on the 15-minute time frame. After marking that, remember this is called a liquidity. Liquidity take out these 5-minute short-term swings into the 15-minute time frame. What do? You go to your 1-minute time frame and look for market structure shift to the upside on the 1 minute. You go to your 1 minute time. Like I said, that the short-term time frame is being used as an entry point using the market structure shift in our chart. What happened at this point when market structure sweep the 5-minute short-term swing low, it entered into our 15-minute swing short-term swings low? What happened on the 1 minute? Market structure quickly shifts upward and this is our entry point. TC became bullish, which our trend change became bullish on the 1 minute time frame, and we look for our exit at the previous resistance or 3 to 1. Now this is our bullish example on our chart on the SAUD. This trade was taken 2 times at this day, which is August 12, 2024. Remember, I told you that when looking for a way to enter in the market, you need to understand your primary time frame swing, short-term swing. You need to know how to enter on the primary time frame swings. Do you get what I'm saying? It's very simple. So after analyzing our primary time frame is bullish, what do we have to do? We need to mark our theory bar Williams pattern, which is Williams swing theory bar pattern. After marking it, if you see in this example, I marked it here. Price enter into this in the course of this time, which is between the 9 a.m. to between the New York session on the SAUD. This is one of the most high scalping strategy you can use on the gold against the dollar. So you understand what I'm saying? So same thing also apply to this. Remember, this is our short-term swing and price pull into our short-term Williams theory bar pattern. What do? We need to go to our 5-minute time frame. What do you see in this chart? Remember, this is our Williams theory bar pattern, which I talk about on our strategy plan. When price hits this Williams theory bar, What do you think happened at this point? Remember, I told you that there's going to be a liquidity raid at this short-term pattern. Look at what I'm saying. There's a liquidity raid at this short-term pattern on the 5-minute time frame. If you may look it clearly, this acts as our short-term low on the 1-minute time frame. This also at our short-term low on the 5-minute time frame. What do you see at this scenario? This also acts as our 5-minute short-term low. We have multiple short-term low got traded at this point. What do you think is going to happen on this liquidity? Liquidity was taken at this point, and enter into our Lewis theory bar pattern, and we look for an entry. However, if you notice that you don't want to take this trade, you can be able to step aside and look for the next trade. This now comes to our example 2 on this chart. Look what happened. Price quickly enter into our Lawrence theory bar pattern on the 15-minute time frame. What do? We either look for, like I said, we either look for engulfing candle on the 5-minute time frame, or we look for market structure shift on the 1-minute time frame. Depends. This is because sometimes you can either enter early on the 5-minute time frame. Sometimes you can either enter late on the 1-minute time frame. So let me show you what is going on the 1-minute time frame. First of all, let's quickly look at our example 1. However, when we enter on the 1-minute time frame market structure shift, what do you see in this chart? Market structure shift, TC became bullish at this point. After became bullish, and price quickly hit our Lawrence theory bar pattern, our Lawrence theory bar reversal pattern. As he hit it, we enter at that point, which is our Lawrence theory bar pattern. What do? We set our risk reward to 3 to 1. Our risk reward to 3 to 1, which we are risking 1 to get 3. The example 2 of this also comes in. What happened at this point? This is the reason why I told you this strategy is one of the most profitable strategy. In this our example, we notice that when market structure shifts upside, what do you notice? Remember, there was no pullback to our pattern, which is Lawrence theory bar. There was no pullback. This is the reason why I told you that this is when the 5-minute candlestick now comes in, because sometimes you can either miss it on the 1-minute time frame, sometimes you can either have it on the 5-minute time frame. So on this example, I use the 5-minute time frame. This is because there was an engulfing candle when price hit the 15-minute short-term swings, our primary time frame. We look for 3 to 1. Do you see how simple this strategy is? Now let's quickly dive on to our conclusion of this video. Now this now comes to our conclusion of this video. First of all, I talk about the uses of multi-timeframe strategy, which is the use of multi-timeframe analysis by understanding our trading style. This was being used as our primary time frame. You understand that how we can be able to optimize our primary time frame using the Lawrence theory bar rejection pattern. So we now also talk about understanding market structure, which market structure understanding by analyzing different time frames to minimize our risk using our entry and our exit. By using the 15-minute time frame as our short-term swings by using the 5-minute time frame for our short-term liquidity read into the 15-minute Laurelian stereo bar pattern. Also talk about consistent trading performance, on how we can be able to understand what is the difference between the bullish and bearish condition. By understanding how we can be able to trade our time frame. I normally explain that we use our primary time frame as a means of looking for our bias, our trend, overall trend. We use our medium time frame to look for liquidity into our short-term swings on the 15-minute time frame. We look for our short-term market structure shift to the upside when price hits our 15-minute short-term swings. Do you see? Sometimes we use the short-term time frame as an entry. Sometimes we use the 5-minute time frame as an entry. This is how we trade our market structure on using Laurelian's multi-time frame strategy. So this is one of the most profitable strategy that you have ever come across in the internet. Thank you for watching this video. I really appreciate your time. I really appreciate your support in this channel. Please, I would advise you to please like this video and comment on the comment section below. And if you have any question regarding what you don't understand in this video, please comment it below and I will reply you and which you are confused in this video. Thank you for watching. Happy trading. God bless.